Well, hello and welcome to our weekly Boom, Doom and Zoom Share Q&A show. Of course, I'm Peter Switzer. I'm joined by my colleague Paul Rickard. And yes, we are 3 pizza boxes apart. That's apparently the 1.5 metres, Paul.
There's talk about moving it down to 1 metre, I heard, but I don't
Two
know.
boxes.
I haven't heard the 3 pizza boxes, but that's a good one.
I just saw on the weekend. Anyway, so obviously we would like you to ask questions. This is exclusively for the Switzer Report subscribers. So if you do want to ask a question live, I guess the question is, how do you do it? Now, our Zoomster expert, John Bragg, has sent an email out explaining out how you do it. I'll also let my very tech-savvy colleague, Paul Rickard, explain how someone can ask a question live. Paul, take it away.
I'm not sure I can do that because I thought you had those instructions up front.
Well, they are down the bottom. If you look down the bottom, there's a little icon that looks like a hand. If you click on that, your hand goes up and we can see you here, and then we call your name out and away you go. Or else you can, if you want, email in a question. That's the little box. Is it Q&A, John? The Q&A box. That's it. Okay. So without any further ado, let's kick off with the Boom, Doom and Zoom show. Okay, let's have a look at our first question. And there is a hand up. Well done, Burl000. Take it away. Okay, currently we can't hear you, Burl.
Can you hear me now?
So we're reading this one out, mate? Are you hearing it and I'm not?
I think our colleague is hearing it, but we're not. So we just got a little...
Now, unfortunately, he can't answer the question. He can hear it, but he...
Now we've got it. Is that right, John?
Okay, take it away, Bill.
Just wanted to get your thoughts on AGH.
AGH. Well, I've got to say, it's not a stock that I usually follow. So Paul's going to our receptacle of knowledge. What have they got there, Paul?
I have to say, Burl, I don't know anything about AGH, so and I'm just going to see if I can find out who the analysts say while I'm here. So it's just not a stock I.
So how long have you bought AGH, Burl, or are you contemplating buying it?
Yeah, it's Alan. No, I bought it last year, and then I went down, and then I got back in the middle of March, and now it's tripled. It's to do with cannabis. Medicinal cannabis.
It's one of those ones, yeah, okay. I've got to say, I haven't followed it. I fully intend to actually interview somebody on the subject. I know Amanda Jury from CNBC, her husband has a listed company. I know Dr. Ross Walker's also linked up with a medicinal company. So I promise to do something in the Switzer Report, not this week, but the week after, and I'll get the lie of the land on AGH as well. Paul?
I've got nothing to add. I can't see any analyst stuff on it. No. So there's a graph on screen you should be able to see. But look, this is, you stumped us up front. I'm sorry.
Yeah, that's good. It does actually then drive us with the sort of subject material that we put into the report. As you can see from the chart, Paul, it's kind of at a bottoming process, isn't it? But it's not really showing you that it's time to jump on board. But it's not also suggesting to me you should slit your wrists and go and give up on the stock. But Alan, we will look into that one for sure. Michael Coe, your hand up. You got a question for us? Michael, take it away. Can you hear him, John? And we can't. No, you can't. So, Michael, why don't we go to the next one then? Let's go to George. George, could you ask your question, please?
Yes, guys. I'd like your thoughts on RAAF.
All right. So just give us the name of it. Just
Rural Funds.
Rural Funds.
Okay.
Yeah. Look. I'm inclined to. I quite like the company. It's in a tricky part of the rural business. And I guess there's a bit of recovery which will help its business in due course. Sort of, as you can see in the price there, it hasn't done a lot. And for that reason, it doesn't come on a lot of the radars out there. I'm just looking at what the analysts have got to say, because it doesn't get a lot of coverage either. If I can just find a couple of things here, just bear with me one tick. You know, there's only one analyst who covers it, the major brokers. That's UBS. They've got a buy on it. They've got a target price of $2.30. So
there'll be 23% upside.
23% upside, but it's just one analyst, so you've got to be a little bit careful. But that's the challenge of that stock. It tells you something that because 6 out of the major brokers have stopped covering it, you know, it's not going to get it's not a lot of the radar, a lot of the institutional managers. So that's just something to bear in mind investing like a stock like RFF.
The only thing I would throw into the mix is that we know that the outlook for rain is very good for this winter, which is probably going to be good for a lot of rural stocks, and partly explains why many of them have actually kicked poor at this point in time. Okay, we'll try Michael again. He's come back to the top. Let's give him a go. Michael.
Your opinion of Superloop price now?
Superloop? Well, it hasn't been a great performer, Superloop, has it?
No, it hasn't been a great performer. Again, it's just a company I really follow to get a real handle on.
Yeah, analysts have only got 3% downside, which is not bad considering what it's been through, but it hasn't been a great stock, has it, Michael? Oh, yeah, he's been muted. Okay, so I think from my point of view, I've got nothing on that I've seen. We've got the screen. I've got to say the chart on screen suggests that the company's heading in the right direction, but it has been a very disappointing company. All right, let's try the next one. That's Tony H.
G'day. Yeah, just wondering what your thoughts are on an allocation of gold and/or gold stocks in a portfolio.
Yeah. Well, you know, the best time to be in gold was about, you know, a year or so ago. It's been on a really nice.
Just, John, you want to just up GOLD? It's an Aussie dollar one.
Yeah.
So,
it's been on a nice rise for at least a year. I know I interviewed Julia Lee last week, and she still is a great supporter of having gold in her portfolio. She's not selling and getting out on the basis that she thinks the end of the rise for gold is gone. Paul, what's your view on gold?
Look, I've never been a gold bull, but I have to admit for the last 12 months at least, it's been a one-way trend on gold.
Yeah.
You know, you can make cases that because, you know, the central banks are flooding the world with money, that's effectively devaluing physical money or electronic money, and gold has a sense of value because it's scarce, and that's one of the reasons. Interest rates are at 0%. Some talking Bank of England talking about going to negative rates, so that's going to be good for gold.
Yep.
I saw a couple of predictions today talking about US $2,000 an ounce in gold. So if I had gold, I wouldn't sell.
No, neither.
I'd hang on. Would I get in now? I don't know. I sort of struggle with just the whole concept of gold, but I think as a portfolio hedge, it makes sense in some portfolio.
Yeah, and I guess, Paul, from a point of view, if you're a defensive player, given the fact that interest rates are so low, gold's capital gain potential still is out there on the argument you put forward. And I will throw in also this, Paul. On one hand, if we get another leg down and the economic rebound is like U-shaped or L-shaped, well, that's going to be sort of such a negative outlook for economies. Gold could do well. On the flip side, if we have a V-shaped recovery, all that stimulation, it could create inflation, which is also good for gold. So every way you look at it, I wouldn't be running away from gold at any point in time.
I think one thing I would say is you've got two ways to invest in gold. You can buy the bullion either three ways. Buy the bullion directly from Perth Mint. You can buy an ETF such as GOLD, which I think is the simplest way to do it. Or you can buy the actual gold shares. Of course, they're leveraged. So people like Newcrest and Evolution Mining, they're very leveraged to the price of gold. So it's like you're sort of taking on 2 or 3 times the risk buying the gold miners. If you're super bullish on gold, stick to the miners. If you're a bit more sort of circumspect, probably the ETF GOLD is the easiest way.
Yeah. And while we're on this sort of subject of gold, the question here from Rob is talking about Julia Lee on the program. And he said, when you ask her the stock she likes, she would include Evolutionary Mining as an example. But on occasion, she replies that she also has a put option to hedge her portfolio. Are you able to ask her more details on this put option? Well, Paul, you can probably cover that as well, because I know Michael McCarthy, believe it or not, about 2 months ago, talked about a put option on his portfolio. It cost him $17,000 for a 95% coverage of $1 million portfolio. So you can see he's done pretty well, at least until the market started to rebound.
Yeah, I mean, put options, we covered this not so long ago. You can buy put options over the effectively the index. You can also buy them on individual stocks. They are volatility being pretty high. They are very expensive at the moment. Not as expensive as they were, say, a month ago, but 5 times more expensive than they were 3 months ago. So the only question with options, the challenge with options is they expire. That's the first problem. And secondly, that they can be pretty expensive strategies. So I think Julia, that's maybe one you can put back to Julia, Peter.
Yeah, we definitely will follow up on that. Now, also there's a question quickly here from Kelvin. Thoughts on Aristocrat's report came out today. Paul, have you seen that one?
I have, yep. Look, the market's probably just a touch disappointed. I didn't thought it was pretty much as expected. It's off a bit today, but you got to bear in mind it's gone up quite a bit the last couple of days ahead of the results. So it's probably not done a lot overall. I think it's off about 4%. I think it's partly the market's disappointment is because there's not a lot of real positivity about looking forward. It's sort of, they're still obviously talking about a lot of growth coming out of digital. Some of their scenarios around the outlook for the physical casinos reopening and slot machines reopening is probably looks a bit optimistic, but there wasn't, this is only till March and they've really only had 1 month or 1.5 months of the COVID-19 impact. And they didn't tell us much more about what's happened in April, May. So I think that's why the market was perhaps a little disappointed. But I think we're going to see, we've seen about a 4% sell-off. I don't think we're going to see too much more than that. But it'll be interesting to see how what the brokers have to say in the next 24 hours on the report. So that's the early take on it.
Yeah. Before the report, the brokers had 11% upside. As Paul said, Aristocrat's been a nice performer in recent weeks. Let's go to Heng Lei. We're demuting you. Heng Lei, your question?
Yeah. Hi, Paul and Peter. On your program and Livewire, there's much suggestions about 4 things: investing outside Australia, investing in tech companies, emerging markets, and in ETFs. Now, there is one particular ETF called Asia, ASIA, which appears to embody all these 4 items. But the question is not about the particular ETF. The question is, what are your thoughts on the risks of such an investment given today's volatility in geopolitical and economic terms?
Yeah, I must admit, I'm totally thinking down the same lines as you, particularly of Donald Trump taking aim at some of China's biggest tech companies. They would be very important components of that ETF. The only argument I could put to you, Heng Lei, is that I think the share price on that unit price has gone down recently. I haven't watched it the last few days. It may well be a Warren Buffett type investment play that you buy when everyone's fearful. But I would be taking a 1 to 2 year view on the stock, the stock, if you want to call it that, the ETF, only because there's so many political things going to be played out between now and November and the US election, Paul.
Yeah, I don't think you see much from us on emerging markets because we really haven't been there.
But other ones have.
Yeah, I mean, certainly the US rally is all about tech, and against that, the downside for that for Australia, of course, is the Aussie dollar's going up, so that's making it a bit more challenging for us investing offshore. And I'm a little bit wary about the whole China-US stuff still, and what that means for emerging markets and the impact. I mean, if you think about it, just in the cycle, COVID-19 is sort of you know, arguably you could say, you know, maybe the Western world is sort of through the worst of it, but the impact in parts of in the emerging markets is probably still more to come. So.
Yeah. But why don't you also talk to them about that ETF we did a thing for NAB Trade for during the week? Because that has Tencent and Baidu in it, but the other techs are more US-oriented techs.
Yeah, you can look at the FANG, which is the new ETF from BetaShares. Now, that's not just the FANG stocks. It's got 10 stocks. It's got Facebook, Apple, Alphabet, Netflix, and Google, but it's also got 3 other sort of US, I guess, leaders in Twitter, Tesla, and NVIDIA.
NVIDIA, yeah.
But it's also got 2 of the China tech companies or China marketplace companies in
Tencent and Baidu.
No, not Tencent.
But that's
Alibaba. Alibaba, and also which is of course is your marketplace in China, and of course Baidu. Which is your effectively your Alphabet or your Google equivalent in China. So that's not a bad way to look at that. I'd probably, notwithstanding they're high, if I had to play tech at the moment, I'd still be playing it for the US. I'm just not convinced about Asia. So I think that's not a bad way to look at it.
Okay, our next one is Benavaz. Away you go with your question.
Hi, gentlemen. My question is about treasury wines. Considering the situation with China right now, and Treasury deals with China a lot, what is your view on that? Should I be holding or selling? Your suggestions, please. Thank you.
Well, you know, the analyst pool, they say up 16% on Treasury wine estates. Once again, you do have the challenges of China, and it's not just Trump and China here; it's Australia and China. I maintain TWE is a very good company, but it has been caught in the crosshairs with the Australia-China thing, and they had some issues themselves as a company. But I still wouldn't be rushing to dump TWE at this point in time. Paul?
No, I wouldn't be rushing to dump it. I mean, I think the market's probably valuing it as a breakup story a little bit. You know, it was a glamour stock for me for a long time until it got its US play wrong and got caught out by the huge change in the US wine market, and then a bit of squeeze then later in China. And I guess people are now seeing it perhaps as it divests the Penfold part from the rest of it, and it's got valuation. So I think, you know, that probably tells you the market's seeing a bit of a base around that $8-9 mark. I don't think the market's got much fondness for it. So in a market rally at the moment, it's probably not going to do a lot. But I think if you'd suffered the pain, I probably would now, and you're not out, I probably would hang on and expect the market will come back to it in due course.
Yeah, and remember, there is a coronavirus impact here as well, isn't there? The way it's fallen down, it hasn't bounced out. But the stocks that Paul and I have liked and talked about in the Switch report are the ones that actually have shown bounce. And some of them are stocks that really won't do well the next year. But at the moment, TWE's chart is not exciting in any shape or form. But I do think once tourism gets back to normal and the relationship with China improves, I think there will be an improvement in its share price. A quick one, Paul, while we're in that area. Craig has a question about Coles. Seems to be bouncing around with no direction.
Yeah, I mean, look, I think a bit interesting. I for some reason, you know, I think Woolworths is an even more interesting chart. They all got so excited about Woolworths, it's now just in the doldrums again. I think a bit the same with Coles. What the market forgot about was actually all these things, when you put selling restrictions on things and you have to put, you know, sanitizer out and restrict the number of customers in the store and have security, that costs a lot of money. Right? So actually all the restrictions and people can't keep on buying toilet paper forever, right? Eventually they get enough. So look, Coles I think is okay. I mean, I think it's probably one of the more attractive income stocks. I don't know.
Dividend not to be challenged?
Dividend not to be challenged. I don't know why it ever got to $17. I think at the moment it's just these things are cyclical. You can see it at the market. At the moment, Coles and Woolworths, after being, the market was in love with these stocks in February, March. Suddenly they're out of favour. And it might just need a little bit of, a couple of months in the doldrums for a while.
Yeah.
But I wouldn't be selling it now. I think it's found a good. It's about
$15 is probably around right. I remember when you talked up at 11, you sort of value in at 11. So you absolutely nailed that. But if you look at that chart, you'll see there that it spurted up to $17 when everyone was chasing toilet paper and stuff like that. Remember, the retail figure in March was up 17%, the biggest ever. But the retail figure in April is the biggest drop ever. It was up 8%, and it's down 17%. So, and that's because people now have stocked up so heavily in late February, early March that they're not going and buying as much from the supermarket. So it's quite a rational thing. But look, any price, I think, Paul, under $15 is a reasonable buy, considering the dividend that's going to be there.
I think the market just forgot that, all these sales were fantastic, but they cost a lot to actually sell. And their actual costs went up as a result of COVID-19, not down.
Yeah.
So, and that's what we're seeing.
Quick one from Jacob. Is Woodside a buy following the government's decision to power with gas?
Oh, I wouldn't rate too much in that at all. I don't think that's any reason to buy Woodside. So I think Woodside is probably okay, but it's not a buy for that reason. I wouldn't link the government's decision on that to investing in Woodside as a result.
Yeah. I got to say, and you guys may have seen, I did actually talk about Woodside being pretty attractive around $19. It's had a nice rise. I do think the outlook for Woodside has been improved by, government saying they're going to work harder and support gas. That's going to be a good thing. But whether it can get back to its old price of $35 in the near future, well, it's going to hedge on oil prices as well, isn't it, Paul? And oil is making a comeback. That's helped Woodside. I think as a long-term hold, I wouldn't be afraid having Woodside in a portfolio of 20 stocks. That's my view. Quick one, David, on Qantas, Paul. Is it buy time for Qantas?
No, I don't think so. I think the market's way ahead of itself on all the travel stocks. I think much more so what the analysts are saying, Peter, but I wouldn't be rushing into Qantas at this time. I think they're going to find it really hard to get back. And, I don't think Mr. Joyce is going to succeed with people sitting in, bunched up each other in a plane. And it's going to be tough. So,
maybe he needs to create bubbles over our head like the Jetsons or something.
I think people remember airlines traditionally have not been particularly profitable industry to invest in.
That's right.
Qantas is not is way off its lows, so I wouldn't be right. I think if I was going to play travel, it's the way I would play. I prefer it as a pure play, but I think it's we've probably seen a lot of the recovery or some of the recovery, and I wouldn't be rushing into it.
All right, some quickies now. Peter Wong. Peter, can you talk? Okay, Pete's having trouble. Let's go Christine Turnbull. Or Chris Turnbull. Chris Turnbull. Next one down. Chris, ask your question, please. Having problems there. Let's go to Rod then. See if Rod can get his communication happening.
Good morning,
Rod.
guys.
Hi.
Good morning, Rod.
Just want to ask you about office REITs. Examples like COF, which is a terrible name in a pandemic.
I haven't thought about that.
But we're all speculating as to what's going to happen to office life on the other side. Have you guys got any views? It's good to see you two in an office, by the way.
Yeah, I mean, look, it's a really challenging one. I mean, that's probably looking pretty much like into value territory at $1.85. The other stock is Dexus, which has also just gone out of, the market's out of love with Dexus.
Yeah.
I mean, clearly, look, there's two schools of thought here, and they're a bit contradictory. One is that, well, not contradictory, but on the one hand, a lot of companies seem to be saying that we're going to see, some permanent shift of people working from home. Maybe not 5 days a week, but 2 or 3 days a week. And so that reduces the demand for space. On the other hand, all the last 10-year trend has been hot desking, and hot desking is going to be pretty hard because companies have been reducing amount of area per person.
Yeah.
So,
so you got the germ issue as well.
Yeah. What I would, so I think they're pretty well punished. And I actually think there's probably a bit of value in that part of the market.
Yeah. And we do know John McBain, the CEO of COF, as you want to call it, Rod. And I interviewed him not long ago, and he was saying that a lot of his clients are very stable type clients, government clients and things like that. So he's not expecting a big exodus. But I do think the whole sector is going to be challenged by the issues that Paul raised. And it may well get down to looking at the calibre of the tenants in these buildings that will actually determine whether the share price goes. But I do think COF looks like a bit of a buying opportunity for the person who's prepared to wait. It's going to take a year or so.
I think I tend to wait to see how that plays out. What I wouldn't be doing is investing in developers. I think they're going to grind to a halt because if you look at the skylines of Sydney and Melbourne, there's quite a few office buildings being completed. And I don't know what they do next, right? So I think that's going to be challenging.
I certainly wouldn't rush into Lendlease or something like that. Let's go to Tony H. Tony. You got a question for us, Tony?
Not another one, no. I already asked about gold, and I got.
All right. So it's good to have you back, but have a nice day. Bruce and Mary Ann Johnson. Let's try that one. Bruce or Mary Ann?
Yes, it's Bruce here. I was just going to ask about Amcor during the large drop back in March. There, it was, I think it just went under $10 and so forth. And what's your view of it going forward?
Personally, I like it. The analysts like it as well, but up about 14%, they think. I think this whole shift to buying online, which I think has been escalated by the fact that people have been locked up in their homes. You know, companies like Kogan have reported bigger sales. That means they have a bigger demand for boxes. And you know, that's why a company like Goodman's done well. Goodman's in the fulfillment process. So I think Amcor is a solid company anyway, but I think it's been given a bit of a boost. You can see the kind of bounce back there. It fell with everybody else, but it's come back, and I think it's a reflection of the fact that it's in a nice position if the world becomes a greater buyer of online products. Paul?
Yeah, I mean, it reported okay. It had its quarterly report last week or the week before, and it basically it's saying things are okay. In fact, it's seen a pickup in demand and a bit more specialty packaging because of as consumers change. So I think Amcor's all right. I mean, the US acquisition, you know, really for an Australian company seems to be going okay. I don't say it is, but they're reporting it as going okay, which was the other thing. So yeah. I think it's a stock for your portfolio, Amcor. I like it. It's in a couple of mine, and I don't see any reason. I didn't actually know it got down below $10.
No.
I missed that. It was all so quick, but it looks okay. I think. Amcor.
Yeah. A classic example of the sort of stock you buy when everyone's fearful. We've got to throw this question in. Anonymous attendee of a couple of 100,000 in the market now, with half of that invested since the downturn. He's a genius. She's a genius. I have 400,000 in cash. Should I put some of it into the market now or wait? Come on, Paul. Tough question.
Well, I mean, if you looked at the US, they're behaving like there hasn't been a COVID-19 crisis. That's right. And so, although a lot of it's been in the tech stocks, but there was pretty good bounce. Our market is a lot more circumspect. I think, the market's saying it wants to go up. I'd say it's ahead of itself, but I think in this situation, I think if there was a second leg, we may have already seen it. I've been thinking it'll go back to 5,000. It really hasn't done a lot of headway down there. So I'd probably have more invested in the market. The US is telling you they don't. They believe this is sort of they're back into their bull mode again, almost.
Yeah. What we have to say is the scary moment for the stock market will be if there's serious second wave infections. And I think over the next month or two, Paul, we'll have a very good idea of how second waves are going. From my point of view, and we can't give you advice. And one thing I didn't do is put a disclaimer at the beginning. We can't give you advice. But I got to say, given the fact that you've done well by getting in the market over the last few weeks, I'd be more inclined to use your money to buy really good quality companies on days when the market dips. And have it from a point of view, you've made money in the short term. Maybe your next leg of making money is going to be over the longer term. But that's what I'd be doing. I would not be trying to jump on board thinking that this market's going to run away. We've had a nice bounce, but not as solid as the Americans. And so maybe there is more value here, but I would be buying on down days and be just buying the best quality companies you can imagine. All right. I've got Alan Lentz, Bestify. Anyway, Alan, you there? Have you got a question for us, Alan? No?
No, we're getting no signal there.
No. We'll give Peter Wong another go. Peter. Okay, no good. And try Chris. Chris, are you there? Your hand's up. No, okay, well, we'll go to our email questions. I have 10K to invest. I am after a pretty quick turnaround to help support my business. I'm happy to do a bit of trading, but mate, it's just too hard. Stuart.
Too hard. I'm not going to answer that, Stuart. I think that the stock market, I'm never going to advise someone to be a day trader, right? Chances are you'll move it, right? Yeah. If I knew that, I wouldn't be answering questions, right?
All right, up. Chris, you there now, are you?
Yeah,
Chris?
I am. Can you hear me?
Yeah, gotcha.
Oh, I found the unmute button. Goodness me. Sorry. Look,
okay.
I just heard two very polar opposite views on the banks, which I found quite either confusing or amusing, depending on your point of view. But yesterday I heard another investment advisory service just totally bash investing in the banks at the moment for all the usual reasons. Today I read a blog on MarketWatch that said the smart money in the US now is starting to move out of the stocks like Zoom that did well early in the virus and are now moving into the banks in America because they're below book value. Yeah. And because we're early in the recession, they're saying now's the time when the banks are on special, if you like. They're probably as cheap as they're ever going to be. What's your thoughts around that whole thing?
I agree with the second one, quite frankly. Paul?
I agree with the second one too.
Yeah, I can remember walking down Park Lane. Is it Park Lane? Park Avenue. Park Avenue. When I took my TV show to the US in 2010, and Maureen, my wife, was beside me, and we saw a big sign for Bank of America. And she said, what's the share price of Bank of America? And it was about $4. And she said, do you think we should buy that if you think, because you're always saying that the American economy is going to come back. I said, yes, we should, but I didn't do it. And she keeps reminding me all the time. The banks get crushed in the early part of a downturn. I think the US banks are going to come, and I think our banks will as well. That's my view. Quickly, Peter, are you there? Peter, hand up. Can you talk? No? Quickly, George Szabo, are you there, George?
Hello, Peter.
Yeah, fire away, George.
Kogan seems to have shot up in the last 3 months. Is there any more potential in that?
I got asked this question the other day on Kogan and whether it was expensive. Yes, it's expensive. It's over $9, I think. Yeah. Look, I guess stocks. There's no reason why stocks are going to get even more expensive. Yeah. So there's certainly more potential. Would I be buying it now? No. But I wouldn't rule out it going higher just because it's people will looking for stocks that can show growth.
Yeah. The interesting thing is that if Harvey Norman and JB Hi-Fi really ramp up their online offering, and Jerry always maintains he's got the biggest sales anyway online, but it's still a small percentage of his business. I wouldn't buy Kogan at high prices. Buying him on serious dips was probably a good thing to do, but I wouldn't be buying at this level here. All right. All right, so ladies and gentlemen, we are out of time. I'm really sorry. We will use some of these questions we've got here emailed to us, probably for some of the subjects we'll put in the Switzer report. Thanks for joining us. I hope you enjoyed it. If there's anything you'd like to give us in terms of feedback, we'd be always very happy to receive it. It's only our second shot at this, but I hope you found it enjoyable and productive. So until next week, thanks very much.
See you later.